from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, taking on a scandal in the quest for the metaverse. Microsoft faces activist investors who want assurances the company can clean up what started at Activision. One of them will join us. Plus, 400 Crypto.com customers hit by a hack. New details on what happened in my exclusive conversation with Crypto.com CEO Chris Marszalek. And Intel CEO striking a tone of optimism when it comes to government funding for chip makers. More from Pat Gelsinger later this hour. All of that in a moment, but first let's get a look at the markets and the roller coaster start to the year. Still going. Our Ed Ludlow here with the latest in the world of tech. Ed, take it away.
Yeah, roller coaster. You hear me say often choppy trading, and this chart tells that story on Wednesday, right? This is the NASDAQ 100, that very tech-heavy index, and you can see we swung between gains and losses throughout the day. A lot of the commentary in the market about earnings season. We get started in earnest next week with those big names in tech, but the market's still, of course, concerned about the outlook for rates. So much to take on board. But if we bring up the next board, we can look at where we ended the day and basically risk-off mode, selling in tech stocks, not just the NASDAQ 100, but semiconductors continuing the slide we've seen after such a great year last year. Mega caps in the NYSE Fang Plus Index selling off too, and crypto kind of really moving with equities in that risk-off sentiment. Come with me, it's my Bloomberg Terminal. It's the time where we start talking about the idea of a correction, right? A technical correction. Look at the far right hand of your screen, the red, and the white line is 10%. Basically, we're getting near to a 10% drop on the NASDAQ 100 from its peak earlier in the year. But you can see the patterns, right? We saw it in March of last year, for example, when yields were rising. This is nowhere near as big a drop over a number of days and weeks like we saw on March 2020, for example, when the pandemic hit, but we're headed in that general direction. So I love this chart because sometimes I stand up here, Emily, I go, oh, it was a down day, it was an up day. If you extrapolate out and look at the bigger picture, we're definitely on a downward trend. And finally, there's one stock I want to talk about, and it was not here in the United States, it was in Japan and Tokyo. Sony dropping by 12.8% on Wednesday in Tokyo. That's the biggest drop since 2008 in the financial crisis. Why? Well, of course, it follows that news with Microsoft buying Activision for almost $70 billion.
Absolutely, Ed. Thank you. I want to stick with that deal in the world of gaming. Mammoth deal between Microsoft and Activision. Joining me now, Bloomberg Seattle Bureau Chief Dina Bass, who has covered Microsoft for 20 years. And Dina, you're reporting that even Satya Nadella would probably be surprised that his biggest acquisition is now a gaming company, assuming that that deal closes. Talk to us about that reversal and what really was the genesis of this deal.
Sure, Emily. You'll remember because we both covered it together. When Satya Nadella was named CEO in 2014, Microsoft was facing activist investors and plenty of regular investors who were a little bit uncertain about the gaming business and how much money was being spent on it and whether it really had any useful tie to the rest of Microsoft's business. And Satya himself was a little lukewarm on that in his introductory memo to employees. But over time, a number of things have changed, both in his thinking and in the market. One of the most significant changes is the ways in which Nadella now thinks of this business as being intrinsically tied to the company's overall cloud goals. Cloud gaming is a huge focus for them, selling cloud software to gaming companies so they can run their own cloud gaming and their own online gaming services is a big focus. And it's become much more central for them. And as a result, he has made a number of acquisitions led by Phil Spencer, who runs that business and did most of the talks himself for some of their biggest deals, including Activision. And it's become a huge investment area for them.
So that said, Activision dealing with really serious scandals, lawsuits. Why take on another scandal? I know you talked to the head of gaming, Phil Spencer, about sort of the journey that they're on and sort of their hopes to resolve some of these concerns. But why is Microsoft taking on yet another scandal?
So, two things. First of all, in terms of cleaning up the issues at Activision, Spencer told me that part of their due diligence was reviewing the steps Activision currently has in place, because remember, if the deal closes, it won't close for another year, and that Microsoft felt comfortable that Activision was on the right track. Otherwise, they wouldn't have done the deal. And they feel comfortable, even though Satya Nadella said it will take a lot of work, that they can fix things once the deal closes. Now, in terms of why do it, it's very, as we just discussed, very strategic for Microsoft, and for a few other reasons that I haven't mentioned already. Mobile gaming is really important. Microsoft has no position in mobile gaming right now. Activision is a leader there. The metaverse. This is a huge bet on the metaverse. Various companies, Facebook, Apple, and others, as well as Microsoft, are talking about this virtual worlds that they want to develop. And half of Microsoft's metaverse strategy is, located in their gaming initiatives, the other half in Office software. And Nadella talked yesterday on a call with investors about how they believe in multiple metaverses, not one controlled by any one company, but how this deal gets them many more communities of creators that can create and be active in different gaming metaverses. So that's very strategic for them as well. Nadella also mentioned, as did Phil Spencer, that this deal should hopefully let them bypass the App Store tax. Microsoft has been vocally unhappy with Apple in particular about that, and they feel that if they have their own massive presence in mobile gaming, that they can get gamers to come directly to them instead of having to go through Apple and Google and pay that tax.
All right, Dina Bass, so much more to cover with this deal. We look forward to you reporting on it, on the steps towards close. Dina Bass, our Seattle bureau chief there. Thank you. I want to continue the conversation and bring in Natasha Lamb, managing partner at Arjuna Capital, and one of the activist investors behind Microsoft's push to investigate company culture. Microsoft is now investigating, Natasha, some of its older issues with its own, sexual harassment allegations dating back to a long email thread at the company in 2019, and you were one of the investors that pushed them to do this internal review. Do you think Microsoft can clean up its own house and Activision's on top of that?
Yeah, I think it's a tall order, but I feel a lot better now than I did before the annual meeting, where we tabled a shareholder proposal asking Microsoft to do an independent investigation of sexual harassment at the company and report out to shareholders and implement best practice. And so that proposal got a 78% vote at the meeting. It was really quite remarkable. Satya Nadella, alongside Brad Smith, really called out the vote as a sea change in the investor-company relationship. And I think that it underscores how important issues of sexual harassment, other ESG issues, how material they are, that institutional investors are catching on. They're pressing companies to act. Even Larry Fink weighed in this week saying that he was going to allow BlackRock's investors to weigh in at companies' annual meetings on the individual level. So I think with given the announcement that Microsoft made last week, that they've hired an independent law firm, that they're going to do an independent investigation, they're going to look at best practice in the industry, and they're going to implement that at Microsoft. It certainly puts them in a better position with the Activision purchase.
Are you planning to ask Microsoft to add Activision to this existing review, or would it be a separate review after the deal closes?
Yeah, I mean, we've already been in touch with Microsoft asking them to do just that. And I believe that would be the intention. It's not going to close until, for another year. I will say that, it was a red flag with Activision and Kotnick. And we were caught by surprise that this would be the kind of company that Microsoft would want to bring into the fold. Not because of gaming and the metaverse, which I understand that, but because of a culture of sexual harassment and male-dominated culture, where there has been a history of allegations of protecting predators. So that's concerning, and I certainly have some concerns with Kotnick himself.
So quickly to clarify, you're asking for Microsoft to add Activision to the current ongoing review or to start a new review once the deal closes?
Microsoft can speak for themselves. I don't believe they can do a review that they'll have control until the deal closes. But we have requested that this be, part of their own cleaning house. And, I would expect in good faith that is going to be what happens. I think, when you look at Kotnik, one of the big red flags that I saw, Steve Wynn is a mentor of Wynn Resorts. I don't know if you followed. Wynn Resorts paid shareholders $90 million for failing to hold senior executives accountable who perpetuated sexual harassment. I would probably put Kotnik in that bucket. And so I think that there's going to be a lot of cleaning up to do.
What are some things you think Microsoft should do now until the deal closes to get that process started at Activision?
I think this is really about culture and making a commitment to improve the culture at Microsoft, to improve the culture at Activision. We've already heard from Satya Nadella committing to do that. From our perspective, from the investor perspective, this is about Microsoft's ability to attract and retain top diverse talent. I think it's a big risk for Microsoft, pulling Activision into the fold. They have their own house cleaning to do, and it's going to be a challenge with Activision. But hopefully the commitment that Microsoft has made in response to our proposal sets them on a better footing to bring Activision in-house and to communicate what they're going to do in a more authentic, transparent way.
All right. Natasha Lamb, managing partner at Arjuna Capital, an activist investor in Microsoft. Thank you for sharing that perspective with us. Coming up, the hack on Crypto.com. What happened? How much was lost? My exclusive conversation with the CEO coming up. But first, I also asked him about that ad starring Matt Damon that's been the butt of more than a few online jokes. Is investing in crypto really as brave as summiting Mount Everest? This is Bloomberg.
We love Matt Damon. We would love to do more stuff with him. I think a lot of criticism around this spot is from people who either didn't see it or they're just like fundamentally not supportive of the industry and don't have the full view of the kind of potential that it has to improve even their lives.
Potentially millions in Ethereum was lost after a hack on Crypto.com earlier this week. I spoke with the CEO, Chris Marszalek, about the breach during Bloomberg's Year Ahead Summit, who shared new details about what happened for the first time.
First and foremost, we invest very heavily in cybersecurity. We've got over 200 professionals around the world who collectively spent the last few years building a very robust infrastructure. And we call it defense in depth. So there are multiple layers. And in this particular incident, some of these layers were breached, which resulted in about 400 accounts having unauthorized transactions on it. We very quickly stopped it. We post withdrawals. We fixed it. We were back online in about 13, 14 hours. And during the same day, all the accounts that were affected were fully reimbursed. So there was no loss of customer funds. Obviously, it's a great lesson, and we are continuously strengthening our infrastructure.
One outside analyst estimates $15 million was lost. I saw another estimate as high as $33 million. Can you give us a number?
Right, we are still working on a postmortem for the incident, and it's going to be posted on our blog in the next couple of days. So I'll leave the final numbers till then. We're working on it. In any case, one has to remember that given the scale of the business, these numbers are not particularly material, and customer funds were never at risk.
So I'm curious what more you're doing about this. What are you doing, and what are the plans you're putting in place now to make sure this doesn't happen again in the future?
Yeah, there are additional layers of security that we're implementing, as well as some new programs that we'll be launching together with the postmortem. I don't want to reveal too much at this stage, but the industry will know in a couple of days how are we going to address this. Historically, we led the industry in terms of security standards, certifications, and we very heavily invest in having military-grade infrastructure. So we'll continue strengthening it and leading the industry to keep this place more safe for everybody.
As I mentioned, you're joining us early from Singapore. The exchange is based in Singapore. Have you had any conversations with the Singapore Monetary Authority? Have they reached out, and what have you told them? And curious what they're asking for.
Right. At this stage, we did not see any outreach from the regulators. We are a regulated business in multiple jurisdictions, so we expect this, and we're putting together all the relevant reports that we will share whenever any inquiry comes in. It's just part of the preparation and part of the process of closing this incident with a full postmortem.
What's it like operating in Singapore? We've seen regulators take so many different approaches to cryptocurrency around the world, from the US to China. Talk to us about the environment there.
I think Singapore is very supportive of blockchain technology and cryptocurrency industry in general. There is a new law that has been enacted, written about 2 years ago, and it's a pretty robust framework that I think other countries should be looking at. We're in the process of securing 2 licenses over there. So overall, very, very supportive environment. I think it's a great place for the industry players, and there's quite a large number of players there.
Now, as I understand it, we're seeing some sort of crackdown happening in Singapore. Cryptocurrency ATMs are being shuttered. There's a crackdown on marketing. How is that impacting your plans?
I think the general point of view of the regulator is that the markets are still too volatile for the general public to participate in. So they want to rein in some of this marketing activity. And I think over time, as the industry reaches new stages of maturity, these will be gradually relaxed. So it does not affect our plans in any meaningful way. We are committed to continuous investment in Singapore. We've got a large and growing team there and working on licenses, and it's an important market for us still.
For more of my exclusive interview with Chris Marszalek, CEO of Crypto.com, you can find it at Bloomberg.com. And coming up, we're going to talk more about all things crypto with MicroStrategy Chair and CEO Michael Saylor, and how he came to be the largest corporate holder of Bitcoin in the world. Part of that conversation, we'll give you a sneak peek later this hour. Plus, Europe's largest semiconductor equipment maker came up short of estimates in its first quarter sales forecast. That's due to ASML's decision to delay testing its machines in order to speed up deliveries. CEO Peter Wenick says he hasn't seen demand like this before.
I think the demand is easily 40 to 50% above our maximum capacity, which I've never seen before. I mean, we've been tested on our maximum capacity from time to time in the past, yes, but what I'm seeing now is unprecedented.
ASML ramped up hiring last year, adding close to 6,000 people on top of just over 30,000 employees as of October. Coming up, let's not waste this crisis. Intel CEO Pat Gelsinger urging government aid to chip makers. Our conversation with him from Bloomberg's Year Ahead. Next, this is Bloomberg. Intel CEO Pat Gelsinger is optimistic the U.S. will pass new legislation to support domestic chip manufacturing. He also says Intel remains very committed to China. Gelsinger spoke to Bloomberg's editor-in-chief, John Micklethwait, at the Bloomberg Year Ahead conference. Take a listen.
We think this is a great start. Maybe the second half of the decade there'd be a CHIPS Act too, but this has created a lot of energy. And, we believe that we, U.S. companies, but also Asian companies, should be participants in building out and accelerating this capacity on American soil. And personally, I've been very involved in lobbying for getting the bill done. We are hopeful that before the continuing resolution ends in February, that timing is one that I think all the legislators are lining up to get across the line. And there's a similar timeline in Europe as well. So we're optimistic. We think it's a great start. And if we can go from 37 to 12, and I've set a moonshot objective where U.S. gets back to 30% over the next decade and Europe gets back to 20%. So we're looking at 30, 20, 50. I think that's an incredibly positive way to leave this decade, and one that we're optimistic that we'll be able to achieve.
Can I just push you a bit on that? It's interesting. You've made a noise about this. Most of the other people who make a noise in terms of standing up to China tend to be people like Facebook and Google, who don't have the same amount of sales there. I checked. China is still the biggest. It's your biggest customer. It's bigger than the United States. Do you worry that they might take retribution on you, or do they have no real choice in terms of chips at the moment?
Well, we believe that every country would want local suppliers wherever possible going forward. Our objective is build the best chips and deliver them into our customers on a global basis. And about 25% of my revenue is in China. We have deep customer relationships. They're ones where they're, of course, would want more of their own supply chains there. We fully respect that. But our customers there want to build the best cloud platforms, the best commerce platforms. And if our products enable them to be markedly ahead of what they would do with alternatives, we'll be able to continue to satisfy that business. And we have seen continued growth in China, and we're very committed to that market for the long term. But the U.S.-China situation does create, challenges for any company to find a pathway through that tenuous geopolitical situation.
Do you think we're heading towards a world where there is effectively two internets? There is a Western one, and then there is one gathered around China, perhaps with a bit of Asia as well. Is that the reality of technology going forward, and something that people should prepare for?
We believe that, and if you think about Chinese policies like dual circulation, the Great Firewall, there's a level of disengagement of that market from the rest of the world. At the same time, we think of technology as neutral.
Intel CEO Pat Gelsinger there with Bloomberg's John Micklethwaite from the Year Ahead conference. The full convo again online. Coming up, paying for college with crypto? My next guest has some radical, or is it practical, advice for parents who want to plan ahead. I'll speak with the CEO of UNest next. Plus, later, President Biden giving a rare press conference to mark his first year in office. A full report coming up. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Crypto under pressure. Our Ed Ludlow back with moves that matter. Ed?
Yeah, look, we talked about it in the show. Risk assets generally selling off, right? Crypto moving with stocks as they've seen declines. But what's really interesting is we kind of lump all of these cryptocurrencies in together at the moment. We do focus a lot on Bitcoin, but I want to talk a little bit about Ether or Ethereum. You can see over a 7-day basis, Ether, which has been down for 4 straight days, has actually underperformed Bitcoin. And we're getting towards this key level that there's a lot of chatter about by market participants. Come with me into my Bloomberg terminal and let's take a bit of a closer look. $3,000 per token for Ethereum. Remember, Ethereum or Ether is the native currency of the Ethereum blockchain. And you can see back on January 10th on the far left-hand of your screen, we did breach $3,000 per token. That's where we've focused our attentions now. And just like much of the narrative around Bitcoin, there seems to be some sensitivity with Ethereum around the outlook for interest rates, rising yields, the risk asset sell-off that we've seen to start this year. But some also saying that 3,000 could be the bottom line that we bounce back from, and we could see further gains. There's a lot of dispute about this and how it will behave. But you have to remember, if you come back to me in the studio, the enormous gain that Ethereum saw in 2021. 400% gain last year versus around 60% for Bitcoin, right? You see that on the chart here, the orange line being Ethereum. So definitely one to keep track of. Just a reminder to the audience that we're always hung up on Bitcoin, but there are others out there, of course, Ethereum, the second largest cryptocurrency by market value after XBT.
All right, Ed, thanks much. I want to stay on crypto, and my next guest is calling on more parents to buy in to help pay for their kids' future. Why give the gift of crypto? Joining me now, Unest CEO Ksenia Udina. Ksenia, thank you so much for joining us. So first, let's talk about the mission of Unest and what you're trying to achieve here.
Emily, thanks so much for having me. Sure, the mission of Unest is to democratize access to the cost-efficient financial solutions for parents. And currently, platform helps parents build a better future for their kids, to invest and save for their children, and also get gifts from friends and family.
Why should parents in particular be paying attention to this? Isn't crypto a risky asset?
Yeah, so what was interesting is that last year we found out that there is an overwhelming demand from parents to invest in digital assets like crypto and NFTs. We actually sent out the survey to our user base, and overwhelming response was that parents want to see next individual stocks and crypto on Unest platform. And I also believe that this year, crypto is actually going to be mainstream, and actually more parents probably have heard about crypto, even compared to traditional asset classes like ETFs and mutual funds. And Unest is positioned really well to become that first solution to enable parents to save for the sound financial future for their kids with all asset classes, including crypto.
So what do you recommend as a first step for parents trying to plan for their kids' financial future, and how much should crypto be a part of it?
So we definitely encourage parents to focus on well-diversified portfolios. So crypto should not be the only asset class that parents hold in their portfolio, and we encourage them to save for the long term. The beauty of Unest platform is that parents who come and join us, they're not looking to make short-term gains. They're not looking to trade in and out of stocks or crypto. They're looking to build generational wealth and to really secure the kids' financial future with a time horizon between 10 to 20 years.
Talk to us about use cases for the app right now. Who's using it? What are they primarily trying to save for? Is it that first, house, car, education?
Yes, so currently parents, both genders, we have approximately 50-50 gender split on the platform, save for everything that can benefit the child. It can be the first car, the first house, the wedding date. Education, of course, is one of the primary goals. And in addition to just opening a financial account in just 5 minutes and getting amazing tax advantages, parents can also easily get gifts from grandparents, friends, other family members, and also get financial rewards from our brand partners.
And how does Unest compare to other kid-saving apps? I'm thinking of Greenlight et al.
Yeah, compared to other fintech solutions that are currently on the market, we actually focus on saving and investing versus spending. We also start relationship with parents when kids are very, very young, at the most critical age when the child is just born, and we help parents through all the life stages. And we're also going to be the first platform out there that will add individual, stocks, crypto, and NFTs to build that financial wealth for families.
All right, interesting advice. Ksenia Udina, founder of Unest. We'll keep our eye on you guys. Well, the official name for the new Lord of the Rings TV show has been revealed. Rings of Power. And it was revealed by Jeff Bezos tweeting out the trailer this week. Amazon Prime Video's long-awaited Lord of the Rings series has been more than 4 years in the making. It is Amazon's most ambitious effort since it began investing in original programming. Coming up, the future of sustainable agriculture. We're going to talk with vertical farming startup Plenty in an exclusive interview about the year ahead and the future for climate tech investing next. This is Bloomberg. The biggest co-brand credit card issuer in the United States is moving into groceries. JP Morgan will introduce a credit card with grocery delivery startup Instacart later this year. No word yet on what rewards will be offered. Activity on Instacart boomed through the pandemic's widespread lockdowns. Well, climate tech startups are raking it in. A new investment fund backed by Microsoft just raised $200 million for climate early-stage companies. This is the latest in a wave of increasing climate tech investments in a field that requires huge amounts of upfront capital, but with little guarantees of success. My next guest knows about these challenges. Arama Kukutai is the brand new CEO of the vertical farming tech company Plenty. Arama, thank you so much for joining us. We saw a wave of climate tech investing years ago in Silicon Valley, and it didn't necessarily pay off. We saw a lot of failure. Why do you think this round will be different?
Emily, great to be here today. Firstly, look, I think we're producing not only technology products which we can use to farm, we're producing food. And really, there's nothing much more fundamental than figuring out how to provide food security. And that's a big part of what I think we see driving this wave of investment in agritech.
Tell us more about what Plenty is trying to achieve and what gaps it fills.
So we look at produce and fruits as markets that are highly impacted by seasonality, by weather. As we saw in 2019, we're only really one bad fire event away from having major disruptions to food supply, particularly for fresh fruit and vegetables. And so we see Plenty as really providing a technology solution that can take the climate out of the equation when it comes to providing surety of supply to retailers, to growers, and ultimately to the consumer. And over the last decade, we've seen very significant investment go into this sector around the enabling technologies, whether it's improvements in lighting, climate control, management of and growth of food indoors, fresh plants indoors, all of the things that Plenty has really been doing over this last decade to get to the point where we're at now, where we're ready to actually really start scaling and providing our technology and providing, frankly, fresh, available food year-round to consumers.
You were appointed CEO of Plenty just today. Congratulations. What do you bring to the business and what will change?
So I've been an investor actually in Plenty since its start. So I've been both an operator and an investor in agritech for more than 15 years. And as we started to think about how do we scale Plenty from its R&D roots into building really capacity at scale, farms at scale, we're opening in Compton, the world's largest indoor vertical farm by output later this year. I guess I bring commercial experience as well as sort of investment innovation experience to help the company to its next stage of growth.
Now, the former CEO was, of course, the founder, sort of, really passionate about farming. Why did the board feel the need to appoint someone new?
Really, the stage we're going into now is really commercial scaling. It's a different skill set. Matt, by the way, Barnard remains chairman, so he's taken the step up into the board as executive chairman in the company, and he's also going to be continuing his work focusing on particularly our engagement with states, with the federal government, and the work that we're doing here around really transforming farming. So as we think also about the scale of the company, we've announced our first commercial farm in Compton and Los Angeles, and we have further announcements coming this year as we start to hit go on scaling our technology out into many more locations, and actually also across more crops. As you know, we started with leafy greens, but we plan to bring additional crops, including strawberries, including tomatoes, and more to the space. Really, it's going to be a very exciting time for Plenty as we look to scale up.
You're building the world's highest output vertical indoor farm in Compton, California. How's that going?
It's going really well. A lot of the work that we did and some of the shots you had in the background there show our farm in San Francisco, which was our pilot for building the Compton facility. It's in a fantastic location. LA is one of the great food cities in America. It puts us in touch with a lot of consumers as we start to basically put our product out there on shelves in hundreds to thousands, ultimately, of stores. And we're on track to open later this year, so couldn't be more excited.
Softbank's Vision Fund has been one of your biggest backers. How involved is Softbank these days, and do you have plans to raise more money?
They continue to be a great supporter of the company, actually. They've been, frankly, patient and smart capital in helping us get to this point. Yes, as you sort of said at the start of your segment, this is a capital-intensive business. So while it's technology, it's also food production. So we're building and plan to build more assets that will require more capital, and that's certainly part of the game plan for us as we look to grow.
All right, Arama Kukutai, CEO of Plenty. We'll keep watching. Thanks. Coming up, it will be 1 year tomorrow, 1 year since Joe Biden became the 46th president of the United States. We will break down the first year of his term and lay out what's ahead. This is Bloomberg. Inflation has been a big challenge for the Biden administration, and I asked the CEO and chair of MicroStrategy, Michael Saylor, what he thinks the best solution is. This from our latest installment of Bloomberg Studio 1.0. Here's a sneak peek.
Inflation is on the front page of every newspaper in the world today. And the best defense against inflation is a Bitcoin standard. So I don't really think we could do anything better to position our company in an inflationary environment than to convert our balance sheet to Bitcoin, because we basically built a balance sheet on a non-sovereign store of value that's not a currency derivative. 2 years ago, we were sitting on a bunch of cash, and that cash was losing about 10% of its purchasing power a year. And then when COVID struck and the Fed took a more accommodative monetary policy, that cash started losing 25% of its purchasing power a year. So my anxiety was maximized around April, May of 2020 when we had the K-shaped recovery, and I realized that cash is trash, everything's about to get much more expensive, and we needed a strategy. So we adopted a Bitcoin strategy. It's driven up our stock by a factor of 5. In my opinion, it saved the company from a not very pleasant fate. So I'm totally pleased with where we are today.
What do you think then is behind this early 2022 crash?
I think that there's a lot of dynamics here. If you look at the entire crypto ecosystem, you have a set of regulatory uncertainty, especially regulatory uncertainty around stable coins and crypto tokens and whether or not they're securities. And that creates a little bit of anxiety. You have a lot of leverage offshore. Right? You have a lot of crypto exchanges that can trade with up to 20x leverage. And those crypto exchanges have many, many tokens that are cross-collateralized. And between them and the DeFi exchanges, you can get much higher than 20x leverage. So that's a second source of volatility. The crypto markets are almost designed to encourage volatility. And that creates kind of a love-hate relationship between the crypto ecosystem and the Bitcoin hodlers. The Bitcoin hodlers are holding for, a decade, and sometimes for 100 years and sometimes for 1,000 years. And yet you've got fast money hedge funds that have a tax incentive, a huge amount of leverage, and massive volatility. But you have two totally different investment mentalities here. And when they come together, the result is you've got, in my opinion, the world's least risky asset to hold over the next century called Bitcoin. And you've got the world's most volatile fast money market, called crypto. And they're both joined at the hip, for better or for worse, in the year 2022.
MicroStrategy's Michael Saylor there. You can catch the full edition of Bloomberg Studio 1.0 later, 6:30 p.m. Pacific, 9:30 Eastern Time, right here on Bloomberg Television. So much more. Well, January 20th marks 1 year since Joe Biden became the 46th president of the United States. The first year of his term was marked by challenges from, of course, the pandemic, to record gains for the S&P 500 and resurging inflation, a topic he mentioned in his address just moments ago.
Given the strength of our economy and the pace of recent price increases, it's appropriate, as the federal chairman, Chairman Powell, the Fed Chairman Powell has indicated, to recalibrate the support that is now necessary.
This on the same day his approval rating hit a new all-time low of 40.9%, according to Real Clear Politics. I want to bring in Jody Schneider, Bloomberg's political news director. Jody, we were just talking to Michael Saylor, the biggest corporate holder of Bitcoin in the world, saying he got in because of inflation. What were the big takeaways from President Biden's press conference, especially what he had to say about that?
Yeah, well, this was, Emily, kind of an epic press conference. He hasn't given one in months and months. And so this lasted, more than an hour and a half, and he covered a lot of topics. He was trying to make the point with the economy. He was obviously asked a lot of questions from reporters about the economy. And he basically said, look, we're working on it. The Fed is in charge of trying to bring down inflation. He agrees with their policy that they will soon be raising rates and that they will be, the path they are taking, he says, is the way to work out of this. He says it's supply chain, and a lot of it he laid at the feet of the pandemic and the supply chain issues. Also that China, we continue to buy goods from China. During the pandemic, people bought and bought and bought, all those boxes of things at their houses, many of them from China. And therefore, he said they're working on it, but he didn't give a whole lot of evidence that, the White House is going to take a different path. He really laid this at the Fed's feet. He, of course, sympathized, and he sympathized with people trying to, deal with the rising prices for all kinds of goods. But basically, he said they're working on it.
Of course, another big issue, China and the tariffs and, lingering tensions between these two huge economies. Any updates on that?
Yeah, he didn't give a lot. He did answer several China questions, as you can imagine, Emily, but he didn't really state that there would be a difference in policy. He said that at this point, he doesn't know if they will lift those tariffs that his predecessor, President Trump, put in place. But he said at this point, China is not yet meeting its commitments that would allow them to really release those tariffs. He said his trade secretary, the trade advisor, is basically going ahead with talks, but he didn't really indicate that the tariffs will be coming off anytime soon. His new China policy that we've been looking for really hasn't come to bear yet, and he didn't give any indication when that might happen.
In a way, it's hard to believe it's been a year, and yet it went by in a flash. What are the biggest challenges that lie ahead for the next year of his term?
Yeah, as he said himself, COVID, COVID, COVID. Getting the virus again under control, even with he touted the vaccination rates and him getting his administration being able to get that vaccine quickly across the country. But until the COVID, cloud is lifted, he said that there will be these challenges ahead, including in the economy, including with the supply chain, including health, including hospitals. He did say that there would not be a lockdown, that the U.S. would not go that way again. He reiterated that, but he said, and he indicated, as kind of everybody knows, that this continues to be the challenge. And until as long as this pandemic is still with us, that will be the biggest challenge facing his administration in the next year.
Absolutely. Jody Schneider, Bloomberg's political news director, thanks so much. I want to get to another big issue that President Biden and the administration has to deal with, and 5G and the airlines. The FAA issued new approvals allowing 62% of U.S. commercial planes to perform safe landings at airports where 5G service was deployed. This after an 11th hour decision by AT&T and Verizon to restrict 5G service near certain airports. As of Wednesday afternoon, more than 260 flights had been canceled in the United States, compared to 470 flights just 4 days earlier. And that does it for this edition of Bloomberg Technology. Reminder to check out the latest episode of Bloomberg Studio 1.0 with Michael Saylor, 6:30 Pacific, 9:30 Eastern, right here on Bloomberg Television, the largest holder of Bitcoin, corporate holder of Bitcoin in the world. What does he think about the crypto winter? Is it getting a little cold? We ask him that and much more on that edition of the show. I'm Emily Chang in San Francisco. This is Bloomberg.